Okay. Well, hello, everybody. My name is Luke Robinson, and I am a business advisor here at Collective. And Collective, we are essentially your all in one back office solution for your business. And essentially, we're an S Corp company, and we pretty much handle the whole shebang when it comes to an S Corp. The first thing we do is set up your business. In this case, set up an LLC, make an S Corp election, provide a payroll processor throughout the year, handle your monthly bookkeeping, make sure that your finances, of course, remain organized. And then at the end of the year, we'll file your S Corp tax return. So when it comes to the S Corp, we pretty much do it all. But today, we actually have a session called Tax Tuesday. And essentially, what it is, it's an AMA, it's an Ask Me Anything surrounding taxes. So, maybe you have questions on, best practices to run your accounting. Maybe you're interested in self-employed retirement accounts, just anything like that, please feel free to ask me. Now, it is important to get, some of the legal stuff out of the way. And just be aware that this session, it's for informational purposes only. Don't consider this, official tax advice or legal advice. It's not official advice. It's, essentially it's information. This stuff could be wrong. The tax code is very complicated. I could be mistaken on some of the things that I say. So before you do anything official for your business or tax wise, be sure to consult with a tax attorney or a CPA or some sort of tax professional before you move forward with anything. But now that we got that out of the way, I believe that we can start on our questions. And the first one is, what even is an S Corp? Well, that's a good question to ask since Collective is an S Corp company, of course. And it's a good question because it can be a confusing question. There's a lot of people that aren't really sure when they hear the word S Corp, they're not really sure what it means. Or they have kind of a misrepresentation about what it means. A lot of people think that the S Corp is a business entity. It's a lot of people think that it's some sort of business structure, but it's not. It's a tax election. So in order to, become an S corp, you have to have a business entity set up already. So you have to have either an LLC or corporation, some sort of business entity like that before you can elect the S corp tax status. So that's the first thing that I would say. And if you came on board with Collective, what we would do is we'd set up an LLC for you first. Then we'd make an S corp election. But essentially, the reason why you'd want to do that is to ask the government to tax your business in a certain way. Before you become an S corp, like let's just say that you're a sole proprietorship, and let's say that you've already got an LLC set up. Like let's say that you've taken that step. It doesn't matter. You're paying a lot in self-employment tax, specifically before you become an S corp. And the self-employment tax rate, it's a flat tax rate of 15.3%. Before you make an S corp election, a huge chunk of your net income is subject to that tax rate. So for example, or all of that, all of your net income is subject to the tax rate. Kind of depends. So let's just assume that someone is netting their net income, like minus their expenses and deductions and everything like that. Let's assume that someone's netting around $100,000. And before you became an S corp, how someone would come up with their self-employment tax is they'd take 100,000 and they'd multiply it by 15.3%. All of your money is subject to it when you before you become an S corp. But what happens with an S corp election is technically you become a W-2 employee of your own business. In this case, of your own LLC, and you're still the owner, of course. Like it's still your business, but for tax purposes, you literally become an employee of it. And since you're an employee, your business will pay you a salary. It'll pay you a W-2 wage, just like someone else would make if they worked for someone else, like as a W-2 employee. But the cool thing about S corps is that the only chunk of your earnings that's subject to the self-employment tax is your salary. So, for example, let's say that you, like I said, let's say that your business makes 100 grand. And let's also assume, that a reasonable salary for you is $40,000. Let's just make that assumption. That first 40 grand is still subject to the self-employment tax. You still pay it. But the other 60 grand is not. Those are considered distributions to yourself. There are some people, they'll use the term dividends. Some people will use that term for that chunk of money. But long story short, that chunk of money is no longer subject to the self-employment tax at all with an S corp. So assuming, well, in that situation, an S corp saves this person $9,180 in the self-employment tax. So, once you reach a certain point into your business, it's usually a good idea to explore whether or not you should go the S corp route. Ooh, here's a good question. I haven't paid my taxes yet. What can I do now? Well, first off, I know this isn't the question, but I'm just going to add really quick. If you haven't paid your taxes yet, sometimes that implies that you haven't filed your taxes yet either. And even if you haven't paid taxes or can't pay your taxes, go ahead and file your tax return. Even if you can't pay it right now, even if you don't have the money to pay the balance that tax return will show. And the reason that I'm saying that go ahead and to do the return is if you owe taxes and you can't pay them, you're going to be charged penalties and interest. But the thing is a failure to file penalty is a lot higher than a failure to pay penalty. So even though that you can't pay your taxes, filing your tax return and showing the government how much you owe will at least help to decrease the amount of penalties, specifically the late filing penalty that you pay. But let's say that you can't pay your taxes even after you file your return. The IRS offer payment plans. And most people qualify for one, especially if you owe, and again, the rules could have changed, but usually if you owe below $50,000, they'll usually give you, I wouldn't call it an automatic payment plan, but usually you're typically granted a 72-month payment plan. So if you haven't paid your taxes, it's just a good idea to, as soon as possible, file your return, get into a payment plan with them, because eventually, if you do nothing and just kind of let it sit, eventually they'll have the legal right to start levying you, or garnishing your wages or things like that. So it's important to at least get into a payment plan as soon as possible, because usually a vast majority of the time, the IRS can't levy you or garnish you or anything like that if you are current and compliant with your payment plan. So keep that in mind. How can Collective help with my payroll? Well, thankfully, Collective helps with essentially everything when it comes to an S corp. We wouldn't just help with payroll. The first thing we do when you first came on board is clean up your bookkeeping to the beginning of the year. Especially if you're a current S corp, then we'll clean things up at the beginning of the year. And then we'll provide a payroll processor for you to handle your payroll for the S corp. And we'll give you a salary recommendation, everything like that. So payroll services are included in the membership. What are important aspects of a successful payroll structure? Very good question. And the simplest way that I can answer it is to get a payroll processor. Do not do payroll by hand. Believe me, it's a nightmare. You don't want to do it. So first of all, if you need to go the S corp route, it's probably a good idea to set up a call with Collective and just see if we could help. We'll go through your business, see if you even need to be an S corp yet, and a payroll structure kind of is involved with a Collective membership. So we'll get the structure set up. However, if you yourself don't need to be an S corp yet, and you just need some a payroll structure to pay your contractors or employees if you have them, the best thing that you can do, like I just said, is get a payroll processor. Something like Gusto, ADP, what's another one? a payroll processing company like that. And it usually makes it, really easy to just run it electronically. You just follow the instructions on whatever company that you choose to contract with. So that right there is a successful payroll structure. Handling it through a software or some sort of company. Okay. I think we have another question coming in. Can a partnership make an S corp election? Yes, a partnership can make an S corp election just like a single member LLC can. So, essentially, a partnership will essentially a partnership is when two or more people are on an LLC. A vast majority of time, that's what's considered a partnership. And I apologize in advance. I have a mini Australian Shepherd, and I believe he's getting ready to freak out. He sees something outside the window. But if that happens, we'll get through it, and I'll calm him down. But yes, a partnership can make an S corp election. And, essentially what you would need is, a really strong partnership agreement that kind of, outlines how much distributions the partners can take and everything like that. But long story short, a partnership can make an S corp election. How do you think the future of self-employment will be affected with tools and AI? That's a very good question. Well, hmm. Well, the first thing that I think will happen is right now, people when they create a small business, there's plenty of things to juggle, especially in the tech end of things. In the sense of you need software for your business. Sometimes you need specific software that needs to be built, for your business. And I think that an area that AI will just really help is building these sorts of I think it will make building complicated technologies more accessible to someone that doesn't know how to do it. So, I guess what I'm trying to say is before these AI tools, we're not quite there yet, but eventually, I think these tools will get good enough to where you'll be able to type a prompt. And again, this is just a prediction. It may not be true, but I believe that you'll be able to type a prompt into an AI system and just tell it to build you a certain software system. So let's say that you need some sort of specific CRM built for your clients. Um, and let's just say that you originally would need a consultant to hire, like a software engineering consultant to build something for you or anything like that. But I think in the future, tools and AI will just make that a lot more accessible to you, to where you can type it in using the English language and not having to know a lot of the technical jargon, and it will build it for you. So I think what I'm trying to say is it'll change because you'll have more money. You don't have to pay consultants to build your stuff. You'll have more money to go and find your own clients, build your business. So I think that's how it'll change. What are simple tax things that any self-employed individual can take advantage of? Simple tax things. Well, simple and tax usually don't go together, but let me see if I can answer your question here. Well, first of all, a simple tax thing that self-employed people can take advantage of is you can write off expenses. That's one thing. To where, anything that's ordinary and necessary with your course of business, you can write that off from your gross income, which means you're not taxed on what you spend into the business. So that's a big plus, like big, simple tax thing that you can take advantage of there is just figure out, what you're allowed to write off and, do that pretty diligently. And then some other simple tax things. Self-employed retirement, I wouldn't necessarily call it simple, but it's definitely something that you should look into and take advantage of. When you're self-employed, the amount that you can save for retirement usually expands a lot. So, something to keep in mind. Do you only help self-employed people or do you also help small businesses? Very good question. So, yes, we do help small businesses. But right now, the the collective membership isn't available to people that have W-2 employees besides themselves. Because when you're an S corp, you yourself are a W-2 employee. So that's fine. But let's say that you have a company and you're paying several other employees, W-2 employees. Unfortunately, that would make you out of scope for collective. Now, let's say that you had a small business and you paid contractors. You paid 1099 contractors. That's still fine. We could very likely still support your small business in that situation, but not if you have employees, unfortunately. What are some quick benefits of partnering with Collective? Well, for one, is the S corp savings, the S corp tax savings, and our average member, and this is our average member, saves $10,000 in self-employed taxes. And there's some people that I speak to that are saving $15,000, $20,000. So like it just kind of depends on your situation. But so the quick benefits of partnering with a collective is definitely the tax savings. Another one is time savings. Unfortunately, the S corp is more complicated than just a sole proprietorship or a LLC sort of situation. There's more stuff you got to juggle. There's more compliance issues, and there's more work on your end. So essentially, what Collective does is it saves you in that time. We'll take care of the administration to where you can focus on your business, and also we'll take care of saving you money with an S corp, of course. What separates Collective from competitors such as TurboTax? Well, the main difference is TurboTax is self-service, a self-service type of software. Collective is not. Collective is a service provider. So with TurboTax, of course, is you go to turbotax.com and you file the return yourself using their technology. Here, we're doing these things for you. We're handling the bookkeeping for you. We're filing the business tax return for you. So it's not necessary. It's not self-service. You're paying us to handle these things for you. But with Turbo, and also TurboTax, usually all that does is file a return at the end of the year. And Collective keeps you organized and does everything throughout the year too. All righty. Okay, let me see here. Do you still have to pay estimated tax deposits when you're an S corp? Very good question. And estimated tax deposits, just kind of a quick recap on that. When you hear estimated tax deposits, quarterly tax deposits, they're usually talking about the same thing. And essentially, what that is you paying your taxes throughout the year. When you're self employed, you've got to pay your own taxes. When you're employed, like when you're a W-2 person, like working for someone else, you're on a paycheck. And your employer should be taking taxes out of your paycheck and paying them over to the government. So usually you don't have to worry about estimated tax deposits when you're employed because your taxes are already getting taken out of your check. But when you're self-employed, usually there's a certain amount of earnings that isn't automatically getting taxes deducted out of it. Now, with an S corp, technically you still have estimated tax deposits, even though you have a paycheck. When you have a paycheck, when you're on payroll with an S corp, there should be taxes being taken out of your paycheck. However, there's still a chunk of money that, in other words, your distributions that aren't being taxed at that very moment and aren't being paid over to the government because you can take distributions whenever you want to. And there's no automatic tax deductions from distributions or anything like that. So essentially, your estimated tax deposits should cover your distributions, what you're taxed on those. And that's something else that Collective would handle too, is we would calculate your estimated tax deposits for you. What is the best way to handle self-employment as an OnlyFans creator? Well, I mean, to handle self-employment as an OnlyFans creator is pretty similar to other businesses that that have a self-employed situation. And with that type of content, I'm guessing that you probably work from home or you do, quite often in the business. And that means that you can take the home office deduction, meaning you can write off a portion of your mortgage interest, of your utility bills, things like that. So that's one thing is make sure you take the home office deduction if you're working from home. And another thing, let's say, I mean, you can write off things like any sort of electronic equipment that you use for business, things like that. Um, so really, in this situation, it'd be very similar to handling it just as any other business owner. And you might want to, if you're making a certain amount of money, you might want to consider becoming an S corp. And what we say about that is usually if you're netting, meaning after your business expenses and everything like that, if you're netting at least $60,000 in a 12-month time period, that's when we usually say it's worth it to join Collective and become an S corp. So it's something that you might want to consider for the business. All right. As an influencer, what are some things that I can write off? Well, that's a really good question because it's kind of it's a little bit of a touchy subject, to be honest with you, because there's a lot of influencers nowadays, and I understand why they're doing it, but they're writing off things like wardrobes, getting manicures, pedicures, things like that. And their argument is, well, I need to look nice, for my videos and my content. But the problem is the IRS doesn't really see that as a business expense. In your mind, it might make a lot of sense, and I might agree with you conceptually speaking that it might should be a business expense, but the IRS doesn't look at it that way. Usually, if something is not exclusively used for your business, so like something like a wardrobe or nails, or things like that, usually if it's not exclusively for your business, meaning that you're going to use it personally, which you're going to use usually going to use wardrobes personally, you're obviously going to have your manicure out and about using it personally. So usually the IRS says you're not supposed to write off those sorts of things. Now people still do it, when they're not really supposed to. And if they were to ever get audited, it could become a problem for them. But that's one thing that I would say is, be careful when you're writing off that kind of stuff because you're usually not supposed to. But again, and for like content creation and influencing, usually you're working from home, so you can take the home office deduction. And just again, just like anything ordinary and necessary in your course of business, write it off. And again, people will say, well, my clothes are ordinary and necessary. Sure, they are, but they're personal expenses too. It's like they're ordinary and necessary also for your personal life. So usually when those things kind of intertwine like that, it's usually not a good idea to write them off. Okay. I believe we have more questions coming in right now. Can a nonprofit make an S corp election? Usually a nonprofit, no, never heard of that before. Because the S corp election is to save on the self-employment tax. Um, it's usually for profit businesses. Like there wouldn't really be a reason for a nonprofit to even attempt to make an S corp election. But I also don't even think it's possible. I think you need to have some sort of corporate structure, even an LLC, partnership, or a corporation. right. I think I have time for one more question here. What's the difference between an S corp and a C corp? Well, again, the main difference is a C corp is a business entity. It's a business structure. That's one thing. And an S corp isn't. It's a tax election. So that's the difference right there. But also, a C corp can make an S corp election. That's possible. So before, like, let's say that if you just form a C corp and you do nothing, you're usually subject to double taxation. Corporations are doubly taxed, one at the corporate level and then again at the shareholder level. So that's the main difference right there, is that the tax implications are wildly different. But if you make an S corp election on a C corp, you revert back to the S corp taxation, which is very similar to an LLC making an S corp election. Okay. If I apply for an S corp on June 1st, 2024, when does payroll begin? Well, payroll really should begin as soon as you're making money and you have an S corp election. So if you made an S corp election and money is rolling into your business, then some of that money should be paid to you via payroll, via W-2 check. But if you have literally no money running through the business yet, then you're technically not required to run payroll if the business isn't profitable yet. But that is that is all the time that I have today. I've actually got to go and speak to a prospective collective member. But I enjoyed it very much, like I do every week. And I hope that this was useful for you guys watching. And please, like, if you think that an S corp or a collective could be a good fit for your business, schedule a call with us. Feel free to go to our website, send us a message on social media, and we'd be happy to set up a call for you with a new business advisor that'll go through your situation, see if an S corp might be in your best interest, and we'll go from there. But until next time, I will see you all next week.